Carl Icahn is one of the most famous investors in the world and has made himself a net worth through investing of $18.7 billion. And what Icahn likes to do with his investing is purchase extremely cheap businesses that the market hasn't shown much love to. Then he likes to turn around these businesses, get completely new management and board of directors, and revamp the business. So essentially, Carl Icahn is all about getting good value for price paid. Now, we are very lucky as investors that we can see all of Carl Icahn's current investments on the internet. So what I'm going to do in this video is go over Carl Icahn's top 10 stock picks for this current year to see how Carl is positioned and what we can learn from his investments. And these 10 stocks make up 95% of Carl Icahn's portfolio, so they are important to look at. But guys, before we begin, I often cover videos on what guru investors are investing in, so be sure to subscribe to the channel for more videos like these. And if you're feeling extra generous, drop a like. But guys, let's just get straight to these 10 stock picks. So let's immediately go to the stock that takes up most of his portfolio, which is a company actually controlled by Carl Icahn, hence the name ICAHN Enterprises. Carl Icahn actually owns 95% of the company, but the public can still buy into the stock through the ticker symbol IEP. Now, for those who do buy into the stock, you're really going to be well diversified because ICAHN Enterprises engages and invests in a lot of sectors, including automotive, energy, metals, food packaging, mining, real estate, and home fashion. So you got to know that ICAHN Enterprises is a holding company, so it holds a bunch of different investments under the company. So you see straight away that Carl Icahn has immediately diversified his portfolio a whole lot through this one investment, and that's one reason why he's got such a large percent of his net worth in it, and also because he controls the stock and probably knows he'll get superior returns with the company. But the other nice thing about this company is the dividend, 10.5%, which is really good. And what's good to see about the dividend is that it has been pretty reliable for a number of years now. It was in 2005 when ICAHN Enterprises started to pay the dividend, and ever since then, that period of time, the dividend has been increasing. That's about 14 years now of increased dividends, apart from in 2014 where they had that slight dividend cut, but just a year later and the dividend was higher. Anyway guys, I would recommend digging deeper into this stock, especially if you are a fan of Carl Icahn, because he controls the company and has a high amount of his net worth in the stock, 49% of his portfolio. Right, moving on to Carl Icahn's next largest position is the stock called CVR Energy, which comes in at 12% of Icahn's portfolio. Now, this stock is probably not one for the beginner investor because CVR Energy is a petroleum refining company, which does make it a lot harder to understand than your everyday investments. By the way, for those who do not know what petroleum refining is, it's simply the process to transform crude oil, basic oil, into useful products such as liquefied petroleum gas, LPG, gasoline, or petrol, which we use in our day-to-day lives. CVR Energy actually has a capacity of processing 115,000 barrels per day. Now, what I like about oil refineries is that they often produce a lot of cash flow. As you can see, in 2018, they produced over $500 million in free cash flow in just that single year. That is a lot considering that their market cap is $4 billion. That's 1/8 of their market cap. But what I don't like about the company is that their earnings and cash flow can be very volatile and relies on a lot of different factors, including the price of oil. So it is risky. But you know, because it produces a lot of cash, it does pay a healthy dividend of 7.5%, which is good in this market. So weigh up those positives and negatives and weigh up your understanding of the oil market before investing. Now, this stock and Carl Icahn and another very famous investor have a very interesting story to it. Carl Icahn was the investor who bought into the stock and owned parts of the company. Another investor, Bill Ackman, actually shorted the stock because he thought it was a Ponzi scheme. By the way, the stock comes in at 10.2% of Icahn's portfolio, which is a big position. But anyway, it was back in 2012 when Bill Ackman famously made a short bet against Herbalife stock. He essentially said that Herbalife was a pyramid Ponzi scheme and he bought into it around $45 per share. He shorted it. However, another billionaire investor, Carl Icahn, bought into the stock instead of shorting it and was an owner just after when Bill Ackman shorted it. It was essentially investor versus investor, and the world waited to see who was going to win this investment. They actually had a big argument over this investment and a bunch of other things, which I recently watched on a CNBC interview. If you're interested in two financial gurus going at it, you can watch that interview from a few years back. It's a bit of a laugh. Anyway, so the world questioned who would win that investment, and we now know the answer. Carl Icahn made a total profit of $1 billion from being an owner in Herbalife stock. Bill Ackman actually lost $1 billion and recently gave up on his short position on Herbalife stock. So Icahn won, and I'm sure his ego got a boost as well. And Carl Icahn is actually still an owner in this company. He's still long on Herbalife stock. Okay, another energy stock owned by ICAHN. And before we get into the stock, I just wanted to talk about one pattern that I have noticed with billionaire investors. And that is they do like to have a good grasp of all investments or stocks, a good knowledge base, but they also do tend to specialize their knowledge into one or two sectors as well. For Buffett, it was banking and insurance, and for ICAHN, energy appears to be one niche. And CHENIERE Energy makes up 6.8% of ICAHN's current portfolio. This company is primarily engaged in liquefied natural gas related businesses. This includes the development, construction, and operation of its LNG terminal business. The stock is currently selling for a price of $65.50. Its market cap is around $17 billion. PE ratio 34.5. And no dividend. But you know, their earnings appear to be growing well, as you can see, which in 2017 quarter 3, they were in the negatives for earnings. Now they are nicely in the positives. A lot of value investors like Carl Icahn have been very interested in this stock. I've seen a lot of coverage from that value investing community on NEWELL brands. So it makes up 3.7% of Carl Icahn's portfolio, and he has actually fairly recently invested more into the stock. And he invested at a price of $20.88 per share. So you can actually buy into the stock now at a cheaper price than what Icahn bought into the stock at. NEWELL Brands, I'm sure a few of you guys know about this company. They own a whole portfolio of brands. The segments include writing, home solutions, commercial products, baby and parenting, branded consumables, consumer solutions, outdoor solutions, and process solutions. So it's a very well diversified company. One good thing about the company is that there is a good amount of insiders buying into the stock. We got the CEO, Michael Polk, buying, as well as the Chief Financial Officer, who has also been buying into NEWELL Brands. And I really like to see this when I see the pattern of the people managing the business buying the stock. I think it's so healthy that they have some skin in the game and that their wealth is tied to the company that they manage. So that is good to see. NEWELL Brands forward PE is low at 10.67. They're selling for a price of $15.70 per share. And another thing that I like to see is that their price is reasonably close to their book value. Always a positive. To be honest with you, I have not analysed DELL stock before in my 5-year investing career, even though it is quite a well-known company, but it does make up 3.1% of ICAHN's portfolio. So I'm sure a lot of you know DELL, the company, maybe you're using one of their products right now. But officially, DELL are known as a provider of information technology IT solutions. They have a range of products and services including desktops, notebooks, laptops, servers, networking and storage devices. But the problem with DELL is their numbers, and the numbers have been pretty bad, I'm not gonna lie to you. They have been losing money for basically 4 years in a row. But on the plus side, their revenue has been growing extremely well, but so has their expenses. To be honest with you, DELL have a really complicated financial situation, and there was recently an article written that you practically need a degree in accounting to decipher them. Well, I have a degree in accounting, and I can tell you that it didn't do a whole lot in helping me understand a company's financial figures. What did help me is just studying companies before buying them. But anyway, I'd be interested to hear your thoughts on DELL Technologies as a stock, and what you think of their numbers. Another energy company. As I say, a lot of these gurus will expand their knowledge into 1 or 2 sectors and really grind down on them and attempt to make a profit from them. In this case, for Carl Icahns, it's the energy sector, and Diamondback Energy makes up 2.8% of ICAHN's portfolio. So, Diamondback Energy, as per Reuters, is an independent oil and natural gas company. The company focuses on the acquisition, development, exploration, and exploitation of unconventional onshore oil and natural gas reserves in the Permian Basin in West Texas. And this stock, like a lot of energy stocks, is extremely volatile. As you can see that over the past 5 years, they have just been on a roller coaster, especially over the past year. But overall, they are in the positives. They're selling for a price of $100. They pay a dividend of just 0.5% yield, and they have a fairly low PE ratio of 12.4. Okay, 3 more stocks to go, guys, now. So Carl Icahns has over 50 million shares in this company with a value of $517 million, yet it still only comes in at 2.5% of his entire portfolio. The company is FREEPORT-MCMORAN, an interesting name for a company, but people often just call it Freeport for short, and it is a mining company. So they mine things like copper, gold, and molybdenum, and they also have an oil segment. As for the stock, they have an extremely low PE ratio, which is 7, but we got to remember they are a mining company, so that makes sense. Their earnings are extremely volatile, there's nothing consistent. If we take a look at the graph here, that's exactly what it shows. Anyway, they also pay out a dividend of 1.5%, and the market cap is just over $18 billion. Coming in at number 9, 2.3% of Carl Icahns' portfolio is XEROX. XEROX is an American global corporation that sells prints and digital document products and services in more than 160 countries. So the main service that they provide is imaging and prints. Now, one could argue that's not the best business to be in, as things are just being done online these days. Instead of printing a photograph, you just use Instagram or Facebook. Instead of printing off your financial statements, you might just keep them online. So maybe not a high growth stock. I mean, if we look at their revenues, they are on the decline. So I guess you could say it's more of a cash cow business, as they are paying out a decent amount of cash to shareholders, a mature business with a 3.2% yield. But the stock hasn't really done a whole lot over the past 5 years, and I personally struggle to see where ICAHN is going with this pick. And the last stock that we're going to cover in this video that is part of ICAHN's portfolio is NAVISTAR International, coming in at 2.1% of his portfolio. ICAHN owns over 16 million shares in this company. The industry that NAVISTAR operates in is the heavy machinery and vehicles one, because they engineer trucks and buses that deliver a promise of being on the road and staying there. Not much of a promise really, or is it? And also they manufacture military vehicles as well, so it's a very niched business, which I tend to like. NAVISTAR selling for a price of $36.70 per share. They have a low PE ratio, which we have seen with a lot of ICAHN stocks. As I say, he likes to look for good value to price, or a cheap price to the money bought in. They pay no dividend and they have a relatively small market cap of $3.6 billion. Definitely a stock to look into. And these 10 positions make up 95% of Carl Icahns' portfolio. They are by no means small positions and make up a huge amount of the billionaire's net worth. And I'd be interested, if you guys had a favorite stock from this list. If I personally had to pick one, I'd say NEWELL Brands. It pays a nice dividend. It's a solid diversified business and it's going for a cheap price. But I would thoroughly recommend that you go and check out some of the videos that I've done on other billionaires' portfolios. You can learn a lot from where they have invested their net worth and their money.